Hello everyone. Today's class we are going to solve our fifth problem of cost sheet with different units produced and sold. Before we solve a problem with same units produced and sold, right? In this problem we are going to solve problem with different units produced and sold. See here, XYZ Limited provides the following data for the year ending 31st March 2025. Raw materials consumed 2,40,000, direct wages 1,50,000, direct expenses 30,000. This we need to add raw materials consumed, wages and expenses, then we will get prime cost. Next one, to arrive factory cost we need to add factory expenses to the prime cost, that is 50% of direct wages. Next one, administration overheads, that is rupees 1,20,000, then we will get cost of production, right? Next, selling and distribution overhead, that is rupees 25 per unit sold. Here units produced how much, that is 10,000, and units sold how much, 9,000. Means the stock with us, that is 1,000 units stock with us, means 10,000 minus 9,000. We produced 10,000 units but we sold only 9,000 units at rupees 120 per unit, means it results into 1,000 units with us, right? So here what we have to do, 1,000 units we have to deduct this closing stock of finished goods from cost of production, then we will get cost of goods sold. Clear? So prepare a cost sheet showing cost per unit and compute profit for the year. Let's solve the problem. See here, cost sheet for the year ended. Raw materials consumed how much, that is rupees 2,40,000. Raw materials consumed, that is rupees 2,40,000. And what is our cost per unit here? Whether we have to take 10,000 units or 9,000 units, till cost of production we have to take units produced, means that is 10,000 units till cost of production. Clear? Now we have to take units produced, that is 10,000 units, not 9,000 units. Clear? So raw materials consumed how much, 2,40,000 divided by 10,000, that is equals to rupees 24 is our cost per unit, rupees 24. Next one is direct wages. Direct wages how much, that is rupees 1,50,000, and direct expenses 30,000. So first we will see the cost per unit, 1,50,000 divided by 10,000. 1,50,000 divided by 10,000, that is 15. 30,000 divided by 10,000, that is equals to rupees 3. Here I will write down units produced how much, 10,000, and sold 9,000, and sold 9,000. Clear? So now add 2,40,000 plus 1,50,000 plus 30,000, that is equals to rupees 4,20,000 is our prime cost, divided by 10,000, that is equals to rupees 42. Otherwise add 24 plus 15 plus 3, that is equals to 42. Clear? Now after prime cost we have to arrive factory cost. So factory overheads, that is 50% of direct wages. Here factory overheads 50% of direct wages. Clear? So our direct wages how much, that is equals to rupees 1,50,000 into 50%, 50 divided by 100. 50 divided by 100. So 1,50,000 into 50 percentage, that is equals to rupees 75,000 is our factory expenses, divided by 10,000, rupees 7.5, that is our cost per unit. Now add to the prime cost, then we will get factory cost or works cost. 4,20,000 plus 75,000, that is equals to rupees 4,95,000. 4,95,000 divided by 10,000 equals to rupees 49.5, or add 42 plus 7.5, then we will get 49.5. Next, add administrative overheads. How much? Directly they have given the amount, that is rupees 1,20,000. So write down administrative overheads 1,20,000. 1,20,000 divided by 10,000, that is rupees 12 is our cost per unit. So 4,95,000 plus 1,20,000 equals to rupees 6,15,000. 6,15,000 is what? That is our cost of production. Cost of production for 10,000 units. 10,000 units. So 6,15,000 divided by 10,000, that is equals to 61.5. That is our cost per unit. Cost per unit. Now see very carefully. After cost of production, we need to deduct closing stock of finished goods. Here opening stock of finished goods they have not given, and closing stock of finished goods also not given, but in the problem they have given units produced 10,000 and units sold 9,000, means it results into closing stock, means 1,000 units are still with us. That is our closing stock of finished goods. Clear? See, write down here, closing stock of finished goods how much? 1,000 units. 1,000 units. Now at which rate we have to value the closing stock? Remember very carefully here, closing stock of finished goods, it is always valued at cost of production per unit. Closing stock of finished goods, that is always valued at cost of production per unit, not including selling and distribution overheads or profit. Not including selling and distribution overhead and profit. Here closing stock of finished goods, that is valued at cost of production per unit, that is 61.5. Clear? Here in the problem they will not give closing stock of finished goods separately. Here they will give units produced and sold with different units. Units produced 10,000, units sold only 9,000, means 1,000 units are still with us. That is our closing stock of finished goods. Clear? And then we have to value the closing stock of finished goods at cost of production per unit into 61.5. Clear? So into 1,000, that is equals to 61,500. That is our closing stock of finished goods. Okay, here nil. So what is our closing cost of goods sold? 6,15,000 minus 61,500 equals to 5,53,500. 5,53,500 is our cost of goods sold. Clear? Now next one, selling and distribution overheads. How much? That is selling and distribution overhead, that is rupees 25 per unit. 25 per unit sold. Means here units sold how much? 9,000, means 9,000 into 25. 9,000 into 25. 9,000 into 25. How much? That is rupees 2,25,000. 2,25,000. here 61.5. So total, here we need to calculate the cost per unit, that is 2,25,000 divided by 10,000 or 9,000. Here we have to take 9,000 because selling and distribution overheads are rupees 25 per unit sold. Per unit sold. So 2,25,000 divided by 9,000, that is equals to rupees 25. Rupees 25. Now we have to add the selling and distribution overheads to the cost of goods sold. 5,53,500 plus 2,25,000. 2,25,000 equals to 7,78,500. 7,78,500. This is our cost of sales divided by 9,000. 86.50. 86.50. This is our cost per unit. Now sales. Sales how much? That is 9,000 into 120. 9,000 into 120. 10,80,000. 10,80,000 divided by 9,000, that is equals to 120. So what is our profit? Here sales, that is more than cost of sales, means that results into profit. That is our balancing figure. Clear? So 10,80,000 minus 7,78,500 equals to rupees 3,01,500. 3,01,500. That is our profit. Clear? Minus 1. 33.5. Okay, or 3,01,500 divided by 9,000 units, that is 33.5. Otherwise you can deduct 120 minus 86.50. Okay, this is our profit. So be very careful in this case, that is unit, they will give just units produced and sold. We have to find out the closing stock of finished goods. In this case, closing stock finished goods is 1,000 units, and always closing stock of finished goods, that is valued at cost of production per unit. Cost of production per unit, and not including selling and distribution overhead and profit. Clear? So I hope this problem is clear to you all. If not, please leave a comment, and I will upload this problem in my Telegram channel. Okay, and I will provide the link in the description box. Thank you.